Hi, this is Karim Kadri and welcome back to my channel. If you want to know more information about me, please refer to the video titled About Me where I included all the information about myself. So right now we are in November 2022 and everybody's talking about the house market crash. So did the market crash or didn't it crash? Now, as always, I'm a believer in numbers and statistics and trends. So I'm going to try and answer this question by looking at numbers. First of all, let's think about what do we mean by a crash. So definitely, mostly a housing market crash is defined as an incident in which prices sees dramatic drops over a short period, and usually this is following a period of inflated prices. So did we have that or not? Let's check. Okay, let's see here. Okay, so let's see what happened recently. So basically, over the last period, the highest point we had was back in February 2022. And at that time, the average property price in the GTA area across all different kinds of properties was $1,348,703. Then things went south, and then we had the lowest point, and that was in July 2022. At that time, the average price was $1,079,069, which means that the prices dropped about 20% over a period of 5 months. So it seems that this qualifies as a crash. Now, should we be concerned? Have that happened before? Have we seen these numbers before? Let's check. So historically, we had number of similar crashes. When we went back about 90 years, in the 30s, we found that there was the Great Depression, which caused a lot of an economic slowdown across the globe, not just in Canada, and that caused a housing crash. At that time, prices dropped by about 60% within the 60s, and it took the market 15 years to recover from that crash. The second crash took place in 1991. At that time, the whole globe, and specifically Canada, was getting out of an inflationary period. Now, uh, what we're talking about during the last year, about being an inflation period, cannot be compared to what we had at that time. At that time, the CPI grew but about fourfold, so that was crazy. And the market started crashing down on inflation, and interest rate went up. The overnight Canadian rate went up to 13 and 14%. So that was caused by an economic shift, the housing crash. And at that time, the prices dropped by about 30s in the 30%. And it took the market about a decade to recover from that crash. The one that happened next to that was 2008, and that was caused by the credit crisis that affected the whole globe. At that time, the drop in prices was only 9.5%. And the market was fast to recover. It took the market only 1 year to recover from that crash. The most recent one took place in 2017. Now, at that time, the market was heating big time, and the government thought it needed to do something to intervene, specifically for the Toronto and the Vancouver markets. And that time, they introduced new regulations, which is called, I'm not going to talk about that, but specifically the effect. So that caused a crash. At that time, the prices dropped by about 20%. But the market was very resilient. It took only months for the market to recover from that drop. And now we come all the way to 2022. What we're seeing right now is caused by the monetary tightening that's being applied across the globe. And so far, the prices have dropped 20%. How long will it take to the market to recover from that? It's anybody's guess. However, let me point something. If you look at the trend here, you will notice that as as we go back and as we come towards today, we will find that the drops are much, much minor than what they used to be. The market is taking shorter to recover from those drops. But on top of that, let's consider the circumstances. I mean, back in the days, things were totally different. So the Great Depression, that's a different story. The inflationary period during the 70s and the 80s, that's a totally different beast. So anyway, that's what happened in the past. Now, let's put things in perspective. Now, over the last 3 years, since October 2019 until October 2022, the average price of properties in the GTA area actually has grown by 28%. While taking into effect the drop that took place this year, still people are making money who purchased 3 years ago, as opposed to what happened in the stock market. If we took the Dow Jones as an indication of the market, so over the same period, the Dow Jones grew by only 23%. Now, 2 years ago, since October 2020 until today, October 2022, we will see that the prices of the properties increased by 12%, whereas the stock market grew by 15%. Now, 1 year back, which applies to people who purchased properties in October 2021, the prices have dropped since then 7%. But at the same period, the stock market dropped by 18%. Now, year to date, since January 2022 until today, until October, because we haven't the numbers of November yet, they haven't been released, but until October 2022, the properties in the GTA area dropped by 6%. At the same period, over the same period, the stock market, measured by the Dow Jones Index, dropped by 16%. Now, since not the peak, the trough of what we happened, the lowest point which was back in July 2022, the market, as a matter of fact, has improved 1%, more or less constant, but this is a change in trend, right? Whereas at the same period, over the same period, the stock market dropped by 9%. Now, to me, this seems that it's a crash, but it's not a big of a severe crash. I like to think about it more of a correction. And let's look at this trend. It shows, this chart reflects what happened, the average price for the average property across the GTA over the last 10 years. You will notice here, if we draw a trend, that the trend is going upwards, and it has always followed the trend. Whenever it diverged from the trend, it returned back to the trend. So back here, this is what happened since the pandemic and things went crazy. We've diverged big time from the trend. Now we're returning back to the trend. So that's why I like to think about it of a correction. We might have started a new trend in 2019. So we're having a better sloping or an upper sloping trend. And this is the red line here. Again, the market is just reverting back to the trend. So we shouldn't be that concerned. And to see numbers, so basically the CAGR, which is the cumulative last year, I mean, for this coverage, the covered period, which is 10 years, was 8.7%. Now, the long-term average annual appreciation for properties in the Greater Toronto Area over the last 70 years has been 7%. Now, what we've seen the year before this drop that we're seeing right now was a growth of 19%. So this was abnormal. Right now, we're getting back to normalcy. So we shouldn't be that concerned. Now, where are we heading from now? Again, it's anybody's guess. Nobody knows the future. However, we always have the capability of doing some analysis, taking into consideration the different economic indicators to try and have an educated guess. Now, I'm preparing a video about that topic specifically, talking about supply and demand in the housing market in the GTA area. What are the economic indicators? Where are we most probably heading from there? Also, what does that mean to buyers and sellers? Is now a good time to buy? Is now a good time to sell? I'm also preparing a video for buyers to answer this question. Is it a good time to buy? And another video for sellers to answer the question, should we sell now? Please don't forget to subscribe, like, add any comment. Any comments are welcome. And kindly follow my videos so you don't miss any of the coming videos. Thank you very much, and I hope you enjoyed this video.